Good afternoon, everyone, and thank you for joining us today on our webinar for long service leave. My name is Angela Lehmann, and I am the Legislation Manager here at ADP. We expect that this webinar will run for approximately 30 to 40 minutes. We have everyone muted, but if there are any issues with the sound or picture at any time during the webinar, please feel free to leave a comment in the chat box on the right-hand side of your screen. Unfortunately, due to the complexity of this topic, and the sheer volume of attendees we have joining us today, we will not be able to take any questions. We will, however, towards the end of the presentation, be able to guide you and give you some advice on to where to find further information and some resources available to you. Please note that all we can do today is provide you with a high-level summary of long service leave rules for Western Australia, and this is not intended to be advice. I would like to welcome today David Bates. He's the Managing Director of Workforce Guardian, our HR partner here at ADP. Welcome, David.
Hi, Angela. How are you going?
Good, thank you.
Good.
Thanks for coming.
My pleasure. Looking forward to 30 minutes or so of interesting information about long service leave and tax implications.
Yeah, exciting topic. So we hope to make this topic well, as interesting as possible and give as many insights as we can. David, seeing as you'll be heading off first, how about I hand over to you?
Thanks so much. I appreciate that, Angela. So g'day everyone. Please allow me to extend my own welcome along to this afternoon's webinar. It is great to have your company. Look, all jokes aside, we appreciate that long service leave and the tax implications of it are probably not the most exciting things for 2016. However, they are very important. And by the sheer number of people who have registered to attend this webinar and who have joined us today, it's clear that this is a hot topic. So again, thanks very much for taking time to join us today. So what are we going to cover off in our webinar? Well, first of all, I'm just going to take you through long service leave and its connection with what are called the 10 national employment standards. And for us here in WA, of course, we've got a slightly interesting scenario because not every business in the private sector here is covered by the 10 national employment standards, one of the unique things about our state. And so I'll explain briefly how the long service leave entitlements relate to the NES as well as to those businesses not covered by the Fair Work laws. We'll then talk about the specific Long Service Leave Act that we do have here in WA before then drilling down into the leave entitlements that people do accrue under the Long Service Leave Act, as well as the payment that employees are entitled to receive when they take long service leave. I'm then going to talk about what's a pretty hot topic actually, which is pro-rata long service leave. We get lots of questions about this. So when does an employee have a right to receive a payout of their long service leave if their employment comes to an end? We'll then talk in a little bit more detail about how long service leave can actually be taken before then turning to some of the other rules that apply to long service leave in WA. I'll then hand back to Angela so that she can take you through some of the key tax considerations that you need to keep in mind, not just when employees are taking long service leave, but also if long service leave is paying out. And because we like to leave you with some handy resources, we will take you through some useful links right at the very end of the webinar so that if you do have some time and you'd like to read a little bit further about your obligations, you can do so at a time that suits you.
Riveting bedtime reading, David.
Riveting. Yeah, that's right. If you're someone who can't fall asleep at night, it might help. If you're someone who can't fall asleep at night and nothing will help, then it'll at least give you something to do. So there you go. You got all your bases covered. All right. So let's start off by just putting long service leave into a context, because here in Western Australia, as we know, not every business in the private sector is covered by the national Fair Work laws and by the 10 national employment standards, which are a part of the Fair Work Act. Here in WA, we have a unique situation now in Australia where only private sector businesses which are incorporated entities fall within the scope of the Fair Work Act. For all other businesses here in WA, such as sole traders or unincorporated partnerships, your legal obligations when it comes to employee entitlements are governed by Western Australia's own state-based industrial relations system. Now that might seem like it means that there are two different long service leave entitlements, but actually, here's the heads up. Under the 10 national employment standards, there is a reference there to long service leave. It is in fact one of the 10 national employment standards, but the intention was back in 2010 to create one national long service leave entitlement for all Australian-based employees, but that never happened. So, as a result, the current Fair Work Act in those 10 NES, it actually refers back to state-based long service leave legislation for now. So that means in WA, regardless of whether your business is covered by the Fair Work Act or not, chances are your long service leave entitlements are at the very least governed by the state-based Long Service Leave Act. And it is important, of course, to correctly identify the source of your employee's long service leave entitlements. So as I just mentioned, most employees here in WA are covered by the Long Service Leave Act from 1958. Now, as you'd expect, there have been some amendments to that Act over time, so that's resulted in the Act that we have today. That certainly, it resembles the original Act, but there have been some substantive changes made to it. But the really key point I'd like to drive home here, Angela, to everyone listening today is that if you're not 100% sure that your business is covered by the Long Service Leave Act, I really do recommend that you get some expert advice. Please don't assume that because you're in WA that this must be the long service leave legislation for you. There might be an enterprise agreement or an award or some other transitional instrument that might mean that your employees have their long service leave governed by something else, and it's critical to find the right source.
Yeah, so we do actually hear that kind of commentary from clients, and we have had to say, well, no, don't assume. You know, you don't want to get this wrong. You really need to seek advice before the long service leave is calculated and processed.
Yeah, because apart from anything else, there are heavy penalties that will kick in if you haven't complied. And, you know, we're talking here about an entitlement that's building up over 10 years. So if you do get it wrong, the consequences can be pretty catastrophic, especially in a small business.
Yeah.
All right, so make sure you do get some expert advice if you're not sure. Okay, so let's have a look at what the leave entitlement actually is under this WA legislation. And for the rest of this webinar, we will be assuming that your business is covered by that legislation that we just discussed here in WA. So under that legislation, an employee is entitled to have 8 2/3 weeks long service leave after completing 10 years of what we call continuous service. So note 8 2/3 weeks after 10 years. But the entitlement doesn't just stop there. It continues to accrue even after the 10-year mark. And look, in reality, very few employees these days actually stay with the same employer for more than 10 years, let alone 15 or 20. But in the event that an employee does, they continue to accrue that long service leave after the 10-year mark. They'll be picking up an extra 4 1/3 weeks of long service leave after each subsequent block of 5-year service that they complete. So that's the minimum entitlement that is accrued under the WA law. And really important to emphasise once again that casual employees here in WA also accrue long service leave. And it's a common misunderstanding or misconception amongst employers that casuals don't accrue long service leave, but in fact they do. And they do in pretty much every state, I believe, in Australia now.
Yes, they do. And again, another common misconception, I guess, that we see from employers as well.
Perfect. All right. So now that we've covered that off and you're all clear that casuals are accruing long service leave under most circumstances, let's have a look at what counts as service and also what would break continuity of service. So you heard me just mention a moment ago that the entitlement to take long service leave is only achieved once an employee has completed 10 years of continuous service. So in other words, service with the same employer. Now, if a business changes hands, if it's sold by one employer, bought by another, and the employees transfer across, then effectively the service is continuous. So that would not break continuity of service. And there are other circumstances as well where an employee's continuous service is not broken. For example, if the employee takes an authorised absence, so let's say an employee approaches you, they ask if they can take 6 months off work because they're going to do an educational course somewhere, you think that that's perfectly fine, you're happy for them to go. That authorised absence would not break the person's continuity of service if they come back to your business afterwards because it was an authorised absence. Similarly, if you dismiss someone, if you terminate their employment, but then you bring them back into the business within 2 months, well, under our WA law, that person's continuity of service is also not broken. So they effectively pick up where they left off. The third circumstance where service is not broken is when there has been a dismissal due to what the Act refers to as slackness of trade, or really in more modern terms, a redundancy, and the person is then re-employed by your business within 6 months. So after that 6 months is over, if the person was to then come back, too late, their service has been broken. But if they are re-employed within 6 months, their service is considered not to have been broken. So continuous service will continue to apply.
You have to love the old legislative terminology, don't you?
Yes, slackness of trade. Yes, it's not exactly how we say it now, that's for sure. Okay, so what we've just done is talked about continuous service, and we've talked about what doesn't break continuous service. But there is a separate concept that we also need to address, and that's what counts towards service. So even though we know, going back to that previous example, that someone who takes 6 months of unpaid leave to go off and do some study, even though we know that that doesn't break their continuity of service, it also, that 6 months, doesn't count towards the service total. So in other words, when that employee comes back after 6 months, they would have to then work an additional 6 months to be back to where they were before, if that makes sense. So it's important to know what does count towards service and what doesn't, because otherwise you could think that your employee has become entitled to to long service leave before they've actually completed the minimum applicable time frame. So any period of unpaid leave, as we've just discussed, that won't count towards service. Any paid personal leave, in other words, sick leave, after the first 15 days no longer counts towards service for long service leave purposes. And any periods between employment with the same employer also won't count. So let's again use that example where you dismiss someone, you rehire them then 1 month later. Well, we know from just a moment ago that their continuity of service isn't affected in any way, but that 1 month doesn't count towards their period of service. So again, they would have to do an extra month on the end in order to get back over that 10-year mark.
And this really highlights just how complicated it is. I mean, for most employers, differentiating between continuity and breaks in service versus counting towards the total service, it's so confusing.
Yeah, absolutely. And, this is just one of, I mentioned before that this is one of the 10 national employment standards, and, we're spending half an hour talking about this one. And, of course, in reality, this one webinar could go for 5 hours and we still wouldn't have covered off everything to do with long service leave. So, being only one of 10 national employment standards, I mean, we're really, this is the tip of the iceberg. It's no wonder so many employers do contact services like ADP or Workforce Guardian from ADP with their questions, because this is such a nightmare, particularly for small businesses. As if you don't already have enough to worry about on a day-to-day basis. You've also got this in the background. And one other point that I'll make here, Angela, is that here in WA, time spent on workers' compensation also counts towards long service leave accrual, but only for the first 15 days. So just like paid personal leave only counts for the first 15 days, same goes with workers' comp. So after that period of time, although it won't necessarily break continuity of service, that extra period of time, if you like, won't count towards service for long service leave accrual. Okay? All right, so now we know how that leave works. Let's assume that an employee has in fact been in your business for long enough. They've completed their 10 years. So now they want to take long service leave. Well, your logical question is going to be, well, what do I pay them? How much are they entitled to receive? Well, again, the answer here comes from the WA legislation itself, which tells us that WA-based employees are entitled to receive their ordinary rate of pay when they take long service leave. Now, what do we mean by ordinary rate of pay? Well, in effect, this is the rate that an employee receives minus any shift penalties, loadings, overtime payments, these sorts of payments that would only be added on as a result of the time of the day when an employee works, or maybe even the day of the week they work. So when we take those amounts out, what we're left with is the employee's ordinary rate of pay, and that's what's payable when an employee takes long service leave. Now, it's the rate of ordinary pay that they're receiving immediately prior to taking long service leave that counts. So if you've just recently given someone a pay rise and then they take long service leave, it's that higher rate that's going to kick in for the whole time. Now, part-time and casual employees receive a payment which is based on the average number of weekly hours worked over their entire period of employment. So this drives home the importance of making sure that you've kept accurate time and wages records.
David, we have seen this time again where, because of this particular rule, it is actually a real issue when the appropriate records haven't been kept, because you just cannot do the accurate calculation as prescribed by the law.
Yeah, it's a nightmare. I mean, how are you going to go back, say, remember this could be up to 9 years ago. You go back 9 years trying to figure out what hours someone worked. If you don't have the records, how are you going to calculate that?
Absolutely.
So really critical to make sure that you are compliant with your time and wages record keeping obligations. I mean, apart from anything else, what this drives home is that if you are non-compliant in one part of employment law, it's going to lead to all kinds of other problems down the track. So,
and I guess it doesn't help that for different aspects of employer obligations, there are different conflicting rules, right? So, financial records are 7 years, and there's all sorts of different rules around record keeping. So we completely understand how a business can get confused and potentially not quite apply the right rules in the right circumstances, but it is really crucial to get that right.
Absolutely. Look, we have the world's most, as I regularly say, we have the world's most complicated employment laws, and I say that very confidently. And at the end of the day, compliance just unfortunately is not an option. People have to know the rules and they have to comply with it. It's the only way to protect yourself and your business.
Absolutely.
So yeah, keep those time and wages records. Oh yeah, one other thing I should just mention there, thanks Angela, it caught me just as I changed the slide. One other thing to remember there is that employers here in WA must also pay the entire period of long service leave up front. In other words, at the beginning of the long service leave period, if the employer requests it. So if the employee is about to take, let's say, 1 month of long service leave and they don't want to receive normal payments through the course of that time, if they'd rather receive it in one lump sum up front, then they have the right to request that and the employer must comply with it. Now, that's obviously going to have significant consequences if you haven't been accruing it. So really critical that you are making sure you have the money set aside for long service leave for your eligible employees. Don't leave it until someone's been there for 6 years before you start putting the money aside.
Absolutely, yeah.
All right. Now, hot topic, pro-rata long service leave. When does an employee become entitled to pro-rata long service leave? Well, the first thing to emphasise here is we're not talking about people taking long service leave. We're talking about an entitlement to receive a payout of your accrued long service leave if your employment comes to an end. Now, here in WA, employees become entitled under certain circumstances to receive that payout of their accrued long service leave if their employment ends between 7 and 10 years of continuous service. Now, keep in mind, once an employee's been in the business for 10 years, none of these rules apply anymore. You have a guaranteed right to receive that payout if your employment ends. But between 7 and 10 years, we have a couple of criteria, things that have to apply, so they may become eligible. Now, the formula for the payment is based on 8 2/3 weeks after 10 years of service. So we go back to that full amount. So in other words, if the employee has completed between 7 and 10 years service, you use that full formula for the full amount that they would have accrued after 10 years and then work it back, if that makes sense.
Yeah.
So it's the percentage of that they've completed effectively is what's going to be paid out to them. So the service includes all years, months and days as well. So when you do that calculation, let's say the employee has been there for 7 years, 5 months, 4 days, you need to do your calculation right down to that level of detail, okay? And that, again, is a common mistake employers make. They might only use full years or half years, etc.
I've even seen financial years, believe it or not.
Really?
Yeah.
Okay, that's a new one.
Yes, yeah.
All right, so critical that you've got it right down to the years, months and days. Now, after the 10 years of service, you no longer need to do that because only additional completed years will count, okay? So it's only in that 7 to 10 year window that you need to really do the calculation down to that level of detail. Also important to note that the pro rata payment is forfeited if the employee is dismissed for serious misconduct. So in other words, if there's an incidence of violence or fraud or theft, those things would constitute serious misconduct for the purposes of both WA and Fair Work legislation. And in those circumstances, the employee effectively gives up their right to receive their long service leave pro rata payment. Imagine how expensive that would be. You've completed 9.5 years service, then engage in some form of serious misconduct and get dismissed. You've just missed out on a massive extra payment because of your conduct.
I'd argue a fair penalty.
I would say fair penalty too, because serious misconduct is obviously a voluntary behaviour. So, you know, you should have thought of that, if you like, before you did it.
Yep.
So, yeah, very costly mistake for an employee to make if they engage in that kind of behaviour. And almost a godsend, if you like, for the employer if they manage to not have to pay out some large amount of long service leave pro rata payment that they had accrued. All right. So now that we know when pro rata kicks in, what happens when it comes time to take long service leave? Well, here in WA, the parties, that is you and your employees, are free to agree about when and how long service leave will be taken. So the great news there is that effectively it's up to you to negotiate with each other about how long service leave can be taken, what works best for the employee and for your business. And employees must be allowed to take their long service leave if they've been eligible to take it for more than 12 months. In other words, if they've completed 11 years of service now, so between 10 and 11 years, they already had that entitlement to take their long service leave. If they haven't taken it by the end of that 11th year, so they've had that accrual there for 12 months, they can simply take it and they have to give 2 weeks notice. That's it. You cannot stop them from taking it in those circumstances. So the moral of the story there is that it is always much better, of course, for employers to negotiate the taking of the long service leave with their employees as early as possible. So as soon as the entitlement is triggered at 10 years, have a conversation, figure out when the employee wants to take it and try and block that into the calendar so that you don't end up in a situation where 12 months down the track the employee says, right, haven't taken any, here's my notice and I'm doing it now. Much better to be in control of it. All right. And the other thing that's worth noting here is that the first block of long service leave should generally be taken in a maximum of 3 separate periods. So once the employee gets to that 10 years of service mark and they've got this nice little chunk of long service leave to use up, the maximum amount of separate periods that they should take that long service leave in is 3. Right. So you could do it all as one giant block, go on a great holiday, come back super refreshed, or you could divide it into 2 or even up to 3 separate periods. But the key is 3 separate periods is the max.
And also I think, and as you know, I always put my little accountant hat back on, from an employer's perspective, being able to clear that liability you've got, or to some extent anyway, because it is a balance sheet item, it does affect your bottom line, having a long service leave accrual for your employee. So being able to somehow reduce or eliminate that liability as best as possible is obviously in your best interest as well.
Yeah, absolutely. I mean, this is a liability that's sitting there and it's growing year on year. Every time you give your employee a pay increase or pass through a pay increase from, say, an award increase or something like that, your liability is going up. Yeah. So it's a good way to remove it. All right. So finally from me, some other rules that you might want to know about when it comes to long service leave. The first is that here in WA you can cash in, sometimes also called cashing out, we call it either. You can cash in or / cash out some or all of the accrued long service leave. Now importantly, again, we're here talking about long service leave once an employee has reached an entitlement to have it effectively, and any agreement to cash it out should be recorded in writing and kept on the employee's file, so there's no doubt that that happened. All right. Employees cannot work for another employer while they're taking long service leave. Sounds logical. The whole point of long service leave is that the person gets a bit of a break, so it's not meant to be an opportunity for them to be paid by 2 employers simultaneously. And as with all other states in Australia, there are some special rules for the construction industry which apply in relation to long service leave to take into account the fact that in that particular industry, people do move between employers far more frequently than in other industries. So it gives those employees an opportunity effectively to not miss out on long service leave. So if you're not sure if that applies to you, again, do get some expert advice because you may need to enroll in the specific industry scheme for long service.
There you go. Okay.
All right.
And cashing in is it is a hot topic, isn't it? Really, so
hugely hot topic.
Always good to know what applies in the applicable jurisdiction.
All right. So having now finished off the statutory entitlements and obligations in relation to WA long service leave, Angela, I'll hand it back to you now so that you can take everyone through the tax considerations that apply to long service leave.
Okay. Thank you, David. So tax. It's definitely not a exciting topic, but always comes hand in hand with this this type of calculation. So once we've established what we are going to pay our employee, we then have to work out what we are going to tax the payment, if at all, evidently. So the first scenario I have for you is long service leave being paid to continuing employees or to employees who are actually taking their long service leave. As you'll all be aware, there are tax tables that the ATO publishes, and they are in weekly, fortnightly and monthly formats, and those are the same tax tables you would use when you run payroll and calculate withholding tax on normal gross salary and wages, etc. So those exact same tax tables apply in this scenario also. The only difference being that where you are paying an employee for long service periods that are greater than one of your pay periods, there is a formula which you can see on your screen there. So, for example, if you pay your employees on a monthly basis, you would calculate what the monthly withholding amount would be, then times it by the period of leave. So if my employee is taking 3 months off, it will be the monthly withholding times by 3, so 3 months off. So just that's the only sort of consideration outside of the normal sort of withholding process to consider. I think also it's prudent to also talk about something that's not necessarily a tax, but it's definitely an employer obligation, which is superannuation guarantee. When you are paying long service leave to a continuing employee or to an employee taking long service leave, that payment actually does meet the definition of ordinary times earnings, or OTE as it's commonly referred to, and therefore superannuation guarantee, or SG, is applicable. So the current mandatory rate is 9.5%. There might be other rates stipulated in your EBAs or agreements.
Might be higher rates, right? Because is 9.5% the minimum?
That's the minimum, right. Mandatory minimum, and then some agreements might have allocations for higher.
You can see I don't do tax, and I don't do super.
So, scenario 2, long service leave when an employment termination is the cause of the payment. So, unused long service leave as a lump sum. In this scenario, you do not consult the monthly, weekly, or fortnightly tax tables. You actually need to refer to ATO Schedule 7. It is referred to as the tax table for unused leave paid on termination. They say unused leave because it also talks about other leave entitlements as well. However, long service leave, the table will split the withholding rates to apply between 2 categories of termination. One which they call normal termination, which includes things such as voluntary resignation, employment termination due to inefficiency, or retirement, just normal retirement. Then the second category is terminations that are due to either genuine redundancy, invalidity, or early retirement scheme. Good time to note, genuine redundancy for tax purposes has its own definition. There are even rulings on what constitutes a genuine redundancy. So just being aware that that definition might be slightly different to a definition, for example, under Fair Work Act or something like that. So being aware of the differences, I think. Actually,
yeah, that's a really good point, because it again, I suppose, drives home that message that unfortunately our federal government departments don't usually speak to each other. So the ATO's particular rulings or definitions of certain terms might be completely different from those that apply under the Fair Work Act. So as complex as that may sound, always a good idea to double check that you're applying the correct rules to the correct scenario.
Exactly. So further to that, once you've determined exactly which category of termination your employee fits under, you then have to look at the accrual date of the leave that you're paying. So what do I mean by that? The Schedule 7 splits the accrual dates into 3 main components. So the accrual that relates to pre-August 1978 service, obviously if applicable. Then there's the second component, which is August 1978 to August 1993. And lastly, there's the post-August 1993 component. It sounds quite tedious, to be honest, but the great thing is the ATO does give quite a bit of guidance on it, and it also does provide which payment summary labels to disclose those components under in the exact same schedule. So you're not going to be looking everywhere to find where it all goes. The important note on superannuation guarantee here is that when you are paying unused leave entitlement on termination, there is actually no SG applicable because it does not meet the definition of ordinary times earnings. So contrary to our previous scenario, there is no 9.5 or greater % of SG required. The other important point to note, and a little bit more morbid perhaps, is that the exception to withholding, when I say withholding, tax withholding, on the long service leave of terminated employees is where the employee is deceased and you're paying it to either the employee's deceased estate or wherever the nominated account is. there's no withholding to apply. So just be aware that in those circumstances, you do not have to refer to any tax tables. It is just no withholding at all. So the very last scenario, very unlikely scenario, but for you know, accuracy's sake and to be complete, we will include it, is the back pay of long service leave. You need to refer to the ATO Schedule 5. It's specifically made for back payments. In this scenario, you generally only apply this if you've either underpaid the employee in a previous period, or if for some reason you've omitted the payment altogether. So Schedule 5 has a number of methods available that you can use to calculate withholding on the back payment. Generally, it is based on the timing of the back pay. So, for example, if it's within the same financial year or not. There are two methods, Method A, Method B. Method A, stop laughing, I know you find this hilarious. Method A, it will apply regardless of the financial year in which the payment relates to, so that's straightforward. Method B has two parts. Part 1 is applied to specific periods in the current financial year, and Method 2 can be relate to any sort of prior period. So the good news is the ATO in this schedule has got like a worksheet step by step to get to the calculation method result. So look for that if you need to do a back payment, because it will actually step you right through. There is a withholding limit. So when you're doing the calculation and you come to your withholding tax percentage, there is a withholding limit of 49% on tax withheld when using an annualised method. This is also going to be impacted by who you're making the payment to. So if the employee has a HEX help, trade support loan or financial supplement debt, it might actually influence that tax withheld limit. So just being conscious of that.
Wow, there's a lot to consider there from a tax perspective.
Yes, yeah, so just because it is federal, it doesn't mean it's necessarily easy.
Yeah, well, we learned that from the Fair Work Act, didn't we? So we're all good.
We have. So, as we promised at the beginning, we have a few helpful resources here. David has kindly provided you with a link to the Industrial Relations sort of hub for WA, and that's the first link there. And I've also provided you with the two schedules I've mentioned in the tax considerations, Schedule 7 and Schedule 5, and hopefully you will enjoy your riveting bedtime reading. However, that is not all. We do have other resources available, don't we, David?
We certainly do, and if nothing else, we hope that this webinar has, I suppose, opened your eyes potentially to some of the other risks, other areas that you also need to be aware of, both from a payroll and taxation and HR law perspective. So if you aren't already an ADP client, well, now would be a great time to come across to ADP. And if you'd like to talk to ADP both about its payroll solutions as well as the Workforce Guardian from ADP HR solution range, please call the ADP team directly on 1800 000 729. And for those of you who are already ADP clients, here's some great news for you. And if you're going to come across to ADP, here's something to look forward to. You'll get access to the full ADP Workplace Advice Line. So this is a telephone-based HR advisory service provided to all ADP clients by the team here at Workforce Guardian. So this partnership is really a one-stop shop. It gives you the opportunity to obtain everything you need from a payroll and an HR perspective all in one place. So have a chat with ADP, and I'm sure that they'd be very, very happy to help.
Yeah, I think we've really made it clear that HR and tax go hand in hand in this scenario and in most scenarios. And we really hope that you've gotten some insightful information here today. So thank you very much for joining us. And as mentioned, the video will become available with a link sent to you shortly. Thank you.
Thanks a lot, Angela. See you later, everyone.